Hi, welcome back. I am Naren, and in this vlog, we will check out what are the things you need to track continuously or at least periodically so that it is easier to file your income tax at the end of the financial year. Why you need to track this information? Because of two major reasons. One is anyway, you need to file the income tax at the end of the financial year. So you really need all the income details from various sources and also the tax paid details like any TDS deducted or the advance tax you have explicitly paid, and also any tax savings information. And if your income is more than 50 lakhs, you also need to fill the schedule AL, which is assets and liabilities. So at least for these reasons, you need to track the information. If you don't track it periodically, then it will be a huge task at the end of the year. And also to pay the tax, if you have only salary as the income, then most of the times it will be like covered through TDS. If not, if you have other income sources, then you need to pay the advance tax at least 4 times in a year if your income kind of like, yeah, if at least to cover at least 50% the tax by June 15th, or 45% by September 15th, 75% by December 15th, and 100% by March 15th. If you don't pay the advance tax, then you have to pay penalties and interest. And how can we do this tracking? You need to get the details through bank statements and any trading account that you have either in India or outside India through for your employer, and 26 CAS that you can download from income tax website, which will indicate the TDS deducted by various entities. It may be the employer or the bank. So, and your employer's payslip or the periodic tax statement to get an idea about your overall salary. And you can track these things in a Google Sheet. And the frequency at which it's good to track, maybe quarterly, or if you have more time, you can do it monthly also. But at least quarterly is a good time to track it, and also like to make sure that you do it before each of the advance tax payment deadlines, so that you will know whether you need to pay any advance tax. And also definitely I think around March 31st, like, and maybe April 1st, so that you have a good idea about the assets and liabilities. Like, it's hard to find out what is the cash in hand at other times than say on April 1st. And what you can track from bank statements: if you have company stocks which you have sold, you can track those numbers. And also, yeah, correspondingly you need to check the statements from your uh, the trading account for the capital gains information, and dividends, like whatever dividends you're getting from the stock investments, because now you need to pay the tax on your dividend. Because in earlier years it was the DDT which was paid by the company, like the stock, whichever stock you own, that company used to pay. But from now onwards you will be paying it, so you need to track it. And recently IT department has said that these things will be tracked in 26 AS, but I think there are cases where the TDS won't be deducted, and it's hard to track it. Like, but in future it should be, I think, part of 26 AS. But in the meantime, you need to track it through your bank statements. If you have rented out any of your property, then the rent income, and if you have any pension policy and all, and if you're getting pension, and any savings interest from your bank accounts, and also any fixed deposit interest. Also, if you have any sovereign gold bonds, the interest that you get from them. These are some samples that you can track. Also, some one-off cases, like if you have sold some property or some insurance has matured, and any hand loans you have given or taken, or any donations you have given for tax savings purpose, or any IT refund you have got in previous year, so that you need to take care of that in the next file as the income. And also, you it's good to track even the cash withdrawn from your account, so that you can even track the cash transactions, so that you can manage it well, minimize the overall cash expenditure for the next year. And what all you can track from your trading account statement? Definitely the profit loss happened in the financial year, and whether something is a short or long term capital gain or the loss. And you can do it for, yeah, your regular in Indian stock market investments, or in foreign stocks through your employer that you get through restricted stock units or stock options. And from 26A statement that you can download from income tax department website, you can track the tax deductions that has happened for your PAN. Some of them are like salary, the bank interests, or the dividends, so that you will get an idea how much tax has been paid till now in the current financial year. And you can also download the tax statements from your employer, like the payslip or a tax statement, which gives information about how much salary has been paid and the tax paid, and also the projection for the rest of the year. This can help, like if you're planning for advanced tax for any other income along with your salary. And definitely these tax statements end up as a Form 16 that you get from your employer at the end of the financial year. And around 31st March, like in 1st April, maybe you can just track some more information if you fall into this bracket to report a certain liability, like how much cash you have in hand, the bank balances at the end of the year, the investment in the shares, the insurance policies, any pending loans, or any tenant advance you have if you have rented out, or the investments in land or building. These are like not the investments made during that year, but it is overall your asset, any jewelry, vehicles. This is some sample how it looks if you try to track these things in Google spreadsheet. And the assets and liabilities. If this is useful, please like, subscribe, and share. Thanks for watching.